Murphy, Deputy 10 minutes.
Thank you, Chairman, and thank you, Mr. Grimes. You're very welcome. You mentioned Lehman Brothers earlier on. I was just wondering, is it fair to say that the Irish authorities, the Department of Finance, the Central Bank, the financial regulator, did not anticipate the fall of Lehman Brothers or a Lehman-style crisis?
Yes.
Okay. But then in your opening statement, you say that from early 2008, the Domestic Standing Group was increasingly active in crisis management preparations, especially in discussions on the legislative changes necessary for nationalising a bank and on the circumstances in which a guarantee of all bank liabilities would be appropriate. So the possibility of a system-wide guarantee was already there, regardless of what might happen to Lehman Brothers or a bank of such size.
Yes.
Okay. And it's fair to say then that having those discussions in February 2008, that crisis management is at an advanced stage, or is it just preparation? Are we in discussions, or are we actually actively working to manage a crisis that could be coming?
No, it was contingency planning at that stage, but I think it had moved beyond it to some extent. I mean, we already had the Northern Rock episode in September 2007. We had the liquidity issues at the end of 2007 also, over at the end of the year. So we'd moved beyond the stage of thinking it could never happen. It was into, I think, realisation that we better be prepared in case, and that a lot of the discussions are around that time had that in mind. So I think we felt it wasn't a purely academic exercise at that stage, and there was a possibility that at some stage we would have to make a call.
Okay, so you had a simulation at the end of 2007, and so now in early 2008 we've moved from simulations and exercises into actual possible management of a crisis coming. So then in relation to March 2008, we heard evidence from Mr. Hurley last week about the Green Jersey agenda. Are you familiar with that?
Only indirectly again, but I would have been present at meetings with some of the banks at a time when the Irish banks as a group were under stress in liquidity terms, and as happened elsewhere, I think there would have been a view that in the light of those circumstances, and in the light of circumstances in which the money market, the euro area money market, was becoming increasingly sort of nationalised and segmented, that from a financial stability point of view, it wouldn't make sense if Irish banks were to pull their lines with each other.
So where did the central...
So it was purely a liquidity issue.
So I'm just curious, though, it's where the central bank and the regulator got the authority to approach Irish financial institutions in secret to ask them to provide each other with funding support in order to maintain the financial stability of the system.
Okay, it wasn't in secret. It would have been in the course of the frequent meetings that we would have had with all the banks at the time.
Did the Domestic Standing Group know about this?
I'm not sure.
Did the board of the Central Bank know about it?
I'm not sure.
Did the European Central Bank know about it?
No, but I think it would have been consistent with what I understand would have been happening in European financial markets around the same time.
And the Department of Finance, do they know about it?
I honestly don't know that. I mean, it might have been mentioned in one of the meetings of DSG, but I couldn't be certain of that.
Okay. In March 2008, it's about 5 months since one of the pillar banks has got funding off from another bank. So was the Green Jersey agenda designed to support a particular institution?
No, it wasn't. And I don't want to emphasise it because it was just, in a way, a general exhortation among local banks that they wouldn't be instrumental in causing an outflow of funds to each other, basically.
So if it wasn't...
At a very sensitive time.
Okay, so if it wasn't concerning an individual institution, then the concern was systemic risk?
Yes.
Okay. And yet, you're not aware if the Domestic Standing Group or the Department of Finance or the Board of the Central Bank knew that this approach was being made?
No.
Okay. And was this a Green Jersey agenda ignored by the banks?
I think that we run the risk of actually overstating it, because it wasn't really a policy decision. It was more something that emerged in the course of the frequent meetings that we told the individual institutions, and in the context of the explanation by them and us of what measures might be put in place to make the liquidity situation somewhat better.
Okay. Was it approached in the context of discussions in February 2008 of the circumstances in which a guarantee of all bank liabilities might be necessary?
No.
Okay.
No, I don't see a connection.
But this action being taken then in March 2008, are we already in the type of crisis that you say the Domestic Standing Group was preparing for?
In March
2008?
It's becoming closer, but still, I think, very much in the liquidity sphere. For example, you'll recall that on the 17th of March 2008, there was a major issue with regard to the share price of one bank. But I mean, and that that was part of a worldwide decline, I think, in bank share prices. But it was a very serious issue. Again, I think some of the pressures eased to some extent after that, but that was the context. Certainly, from then on, a heightened, awareness of the possibility of some systemic issue became apparent.
But prior to that share price issue in the middle of March, you were already considering the possible nationalisation of an Irish bank or a system-wide guarantee to all liabilities.
Yeah, in purely contingency terms, so.
What does that mean?
Well, it means that we didn't have any particular bank in mind, I think, at that stage.
You had a fear for the system?
It was a fear for the... yeah, sure,
okay.
Yes. And I think we needed to be prepared in case there was some systemic issue that would arise.
And at this point, had you already discussed in the Domestic Standing Group the idea of a domino effect or a contagion effect?
It was implicit, I think, right the way through.
Implicit right the way through, that one bank could
Absolutely.
bring the other banks down.
Absolutely.
So, should these concerns and these actions taken in March 2008, they were clearly expressed and acted upon by the central bank and the financial regulator, should they have prompted emergency intervention by the government in one or more of the Irish banks at the time?
It would have been a very big call at the time. I think each of the banks we're talking about had substantial value still in terms of their share price.
Despite, I beg your pardon, despite the drop in shares.
Of course.
From, I think, 50 billion to 30 billion in Irish share prices in a period of 6 months up until March 2008.
Yes.
That wasn't seen as a significant enough fall in share prices.
I think the fall, it was important, of course, but in relative terms, it was higher than what was recorded elsewhere, but not by a huge extent. If you look at the figures about the fall in financial stocks at the time, it's clear that the share prices of the Irish banks, the fall was higher, but not by a massive amount.
But should the government have intervened in March 2008 with a bank or with the system formally, as opposed to what the central bank governor and the financial regulator were doing themselves?
I would not have thought the basis was there in March 2008 to intervene.
Okay, thank you. I'll move on from that if I may. Just then, looking back at the rapid growth in the bank balance sheets between 2003 and 2008, up to that period, I mean, should the central bank have been more active in assessing the asset quality of the banks?
Again, I was not directly involved in my role. With hindsight, I think the growth looks extremely high. I heard Mr. Hurley saying, and describe the actions the central bank took. in terms of the capital to increase that was put in place by the regulator, the expectation that interest rates, were about to rise, and so on. With hindsight, I think some intervention would have been good, but it wasn't seen in that way at the time. And as I say again, I wasn't directly involved at that time.
Thank you, Chair. Just in the simulation exercise in 2007, did fear over the asset qualities in the banks come up on the central bank side?
I think it did, yes.
Were you involved in that simulation?
I was.
Okay, and so when we see the concerns raised by the central bank after the simulation about asset quality, is that you raising those concerns?
We were certainly concerned about them. The simulation exercise, though, was a little different in that it looked specifically at what would happen if one individual bank were to fail or close to failure. We never tested a systemic issue. And I think that conditioned to some extent the lessons that we took from the experience.
Thank you.